guys, Mike here. So, oh boy, we had a very volatile day, that is for sure. We had the markets drop before pre-market, then we had red folder news, then we had them pop back up, then we had Jerome Powell speaking, got some more volatility. So, definitely an interesting day in the market for sure. And so, we're going to go through that. The data that came out, Jerome literally said nothing new. Let me just say that right out of the gates. Let me also say before I forget, appreciate all the comments in yesterday's video, read them all. Tried to reply to as many as I could right there, so I appreciate that. But we're also going to go over in like how you can tell, like, hey, is this risk on or is this risk off, and where we're at now. So I'm going to show you how you can confirm it, and I'll show you historical data to kind of prove that in the charts. Also, if you want to be the smartest person at the party or wherever you're at when you're amongst your buddies and stuff, and this comes up because it's going to come up if it hadn't already, let me know in the comments if it has, which is, oh, if so-and-so, this person gets elected, or this party gets elected, this is what the market's going to do. Let me show you why the market don't care, okay? And then we'll go into a few charts. One, of course, was a stock that had many price downgrades today, still went green. Didn't even matter, okay? Now, talking about the jobs data. This jobs data came out today hotter than expected. That affects something, okay? It was the jobs data, come out 184,000 jobs added to non-farm payrolls, versus 150,000 expected. And of course, February, I will say, was revised up, not down like the data we had yesterday. Now, what does this affect? The yields, right? So the yields, of course, spike up. Stocks don't like that very much. And right now, the 10-year is at a very, tough situation where you see these big wicks right here, and it can't quite close above this level. And so, people are saying, if you can close above that level, it's going to be trouble. But you see what's happening. Red folder news is coming out in the morning, and it's pumping it higher, right, in the pre-market AM, and then it's selling off in the afternoon, right? And you're getting these swings in the market, okay? And so, again, watch the 10-year yield closely. We got more red folder news coming out tomorrow and the next day as well. And, the way you want to know if this is risk on, risk off, not just HYG, that's high yields too. You can pull up junk, JNK, for example, and you see this, how it almost looks like cycles, right? When you look at this, or waves, and you can see when it's going up, the stock market is going up, okay? Because this is the risky folks that are in the bond market, right? This is smart money. This is the risk takers here, high yield junk bonds. And so, if it's going up, it is risk on. So you'll definitely see the high beta stuff flying, everything like that, tech and stuff like that going off. And you can see, if we pull up the SPY, for example, right here, you can see how it follows it. And so it's almost just, it's not telling you, hey, go ahead and get in this stuff. It's almost just a confirmation to say, yep, they're going with us, let's go, right? But it also tells you well in advance. A lot of times, smart money knows they start to sell down. High yield junk bonds start to go down on this, but the market will keep going. The SPY and the Qs keep going. You see that drop off? That's a 13% drop, right? Weeks upon weeks after. But pull up the IWM. This one really follows it. Why? Because the IWM is nothing but risk. These small caps, and you see those same pullbacks. Look at this pullback. 12% on the SPY, 25% on IWM, but it follows it much more closely, and it starts to sell off way faster than the SPY does normally. And you can see what's happening now. See how it follows it? They follow each other exactly? And so it's like, the HYG or the smart money saying, yep, it's risk on, and you see big pops in IWM, and you really see right now what's happening. It's kind of going sideways. We come here on the daily, where same way that HYG is doing, right? It's just kind of trading sideways, not going down, not really making new higher highs, not really making new lower lows, just kind of like, we've run up a lot, here we are. But again, not going down. Now, if that didn't blow your mind, let me blow your mind with this right here, so you'll be the smartest person in the room. And before we continue, please hit that thumbs up for me and think about subscribing. If you like this kind of content, I do daily updates, and then Saturday videos will answer all your questions in the comments and stuff. Thank you very much for your support. And that is this right here, guys. It doesn't matter who is in power come next year or 4 years from now or 8 years from now. It's all about the cycles. There are liquidity cycles. There are business cycles, okay? This right here just happens to be ISM manufacturing, new orders, right? You can clearly see, I'm not going to be able to draw this perfectly, but these are cycles. Up and down, up and down. Below that dark line right there is contraction. Above that dark line is expansion, okay? You want to be above the line. And so you can see as this goes, and the stock market's not going to follow this exactly. What the stock market cares about is, are we going into contraction or are we expanding? All right, that's what this cares about. And 2020 broke or paused the business cycle. It didn't break it. It paused it, right, and threw a wrench in it. That's what threw us all off, okay? But you see the cycle goes back up, And in 2022, of course, starts to sell back down. Market comes down, tanks. We go into contraction, all that good stuff. And now what do you see? Is it expanding up? Is this coming out of contraction where it's supposed to be, where it wants it, and continuing to go? This is what the market cares about. It doesn't matter who's in office anywhere, any way, shape, or form. Right now, we are above that 50 area, so we are in more of an expansion area, not a contraction. Can we stay above there? That's the question. Again, the stocks that really follow this the most is anything on IWM, small caps. You can see it. They're way more in line than you'll see on the S&P or the Qs. Okay, I mean, they almost followed exactly. When you start seeing this thing roll over, right? IWM rolls over. What's happening now? It started coming up. IWM's been rolling up. Okay, so this is what matters. Not Washington D.C., not your state and legislature, anything like that. Okay, when you come over to ISM manufacturing new orders and you pull in the SPY, I'll show you what I'm talking about. Like the SPY and the IWM, you can see there's a SPY. See how the SPY kept running in 2021 and IWM started rolling over before the SPY did? And so the SPY and Qs, they're going to keep going. It's like this last 2 hour or whatever, I swear it is. But they're just not as sensitive. They have these larger companies, right, that doesn't get affected as much. And so that's something to keep your eye on. Now, look at the Purchasing Managers Index. What do you see? You see cycles. Okay, you see cycles. I think I've showed you the liquidity cycle chart. And so you see cycles going through here. Again, I can't draw this perfectly, but you get the point. Okay, and the stock market is not going up and down like this, blah, blah, blah. But what you're just looking at when you're looking at this, say, are we going up or down, and are we going into expansion or contraction? Again, same thing with this. You want to be above that dark line right down there, okay? We're actually above it. Now, will we stay above it is the key question. And so this is what the market cares about. Again, when you add IWM, again, this is what's more sensitive to this. You can see it. The freaking thing almost follows it exactly. Look at that. And so if you're a small caps person, this is what you want to be looking at and comparing this to. Use this for here on out. This is what you want to look at, not MSNBC or Fox or CNN. Like, this is what you want to be looking at, okay? And so hopefully that makes sense. Please let me know in the comments if it does. Again, I've done so many members videos on this kind of stuff. I don't think I've brought that to the public before. I might have. But, that's the kind of thing, like, here for you can use for the rest of your life, okay? The rest of your life. Now, talk about the flavor of the month. One stock that doesn't seem to care what's going on in the market, again, is still MU. This thing was green all day, way better than the other semiconductors. And this is a prime example of one that breaks the long-term resistance line. It's over 20 years old. And what happens? It explodes, right? It is flavor of the month for sure. And what I mean by that, each of these semiconductors is absolutely had their time in the light. And this happened to have a good earnings call, broke a huge long-term resistance line, right? And it's got this explosive move, but now it's just stair-stepping its way up, which we'll see in just a minute. But what I mean by, outperforming the rest of these, look at them. We'll pull up AMD, NVIDIA, Taiwan Semiconductors. Each of these has their moment in the spotlight, right? Whether it was an earnings call, breaking resistance, going to all-time new highs. And you can see, if we go, let's go to year-to-date here. NVIDIA's crushing it. 3 months out, NVIDIA's still up, but MU's coming up hard. 1 month, look at MU. 30% up, and the rest of these things are single digits, if not negative 13%, which is what AMD is over the last month, right? I mean, we'll even go to the 5-day down here, and you can see, I mean, it's handily outperforming these semiconductors, right? I mean, NVIDIA's the last 5 days has been red, but the question is, how high can MU go? Well, let's look at this. Instead of doing fibs or something, you can do that if you want to. Each one of these had, the flavor of the month type title, right? Here was, AMD. And here it goes. It set all-time new highs right here, but then it really exploded right here. Okay, this is when it really exploded. It started going this gamma squeeze up, all this good stuff. And it's above. There's no resistance above it right there. And you can just see, I mean, it's 39%. You're like, wow, that's really good right there. You may even want to go down to the earnings that did down to the left in November. If you want to go with that one, you can, right, just on the earnings deal. And it went up, 23% before it finally sold down a little bit, before going up even more, right? So just looking at when is MU going to take a break, we can look at that one. We can also pull up what? We can pull up Taiwan Semiconductors. This was another flavor of the month at one point in time. Had a great earnings call, ends up breaking all-time highs, I believe right above this, right? So it goes up 30% for a nice 12% pullback and explodes up, total of 53%, right? In a very short amount of time right here. And then if we go over to NVIDIA, right, the king of all kings. I mean, it's had many flavors of the month. It's not really a flavor of the month. It's the flavor of like the decade, probably going to be. You can see right there is when it had its moment, right? The earnings call, it just exploded it, up 58% right there, depending on where you want to take it to, before a nice pullback, right? So looking anywhere from 35, 55%, somewhere in there if you're looking at this. And when you go over to MU, what is it up already? From this earnings call to break into an all-time high right there, then you're looking at 33% already. And so, if we kind of scale this down a little bit, how high could it go? 140, 160. I mean, if you're looking at an NVIDIA type move or even maybe a Taiwan Semiconductors, somewhere around like 149, 68, 150, somewhere in there is where you could see it go. I don't think it's going to be straight up. You figure it's got to take a break. And you can look on the lower time frame and see what it's doing. All it's doing is just stair-stepping, right? Stair-stepping across. It goes up in the morning, and it just sells across the rest of the day, right? So you can easily just see where your supports are as well as you go through this if it does start to break down on you. And again, the gap ups do not feel anywhere near as much as gap downs. Why? Because most stocks are always going up 68 to 70% of the time. So that one does not have to feel. There's plenty on the other three I just mentioned that have gap ups that still have not filled. The only way those usually fill is on a crash. All right, so just putting that out there. Now, Tesla, this one right here defied gravity because green today, still holding right there. It was red in pre-market, still holding, bouncing once again off that trend line right there above the weekly move. But here's the kicker with Tesla. I don't know if this is going to do anything before earnings, but what was crazy is all the price downgrades. It was going on all day long. They were trying to push it down, right? You click on that, it says maintain a buy rating. But when we click on it, oh, look, they cut it from 200 to 189. Great. We go back over. We start scrolling back down again. We go, oh, we're going to find another one. It's like, yeah, we'll find another one. There's another one. We're going to cut from 300 to 280. And you think, well, that's got to be it, right? Nah, we'll keep scrolling here. We're going to find more. Trust me, we got plenty of time to go here. And you see, oh, there's another one right here. All right, pull this one right here up. Cuts from 193 to 176. You think, well, is that the last one? Ugh, not putting a dent in this thing. We need more to come out. And it's like, nope, here's another one, 130 to 115. And there's like 3 others. If I kept scrolling down, you would see multiple others, which is crazy. But this thing just held, right, all day long. So that's not bad. I think a lot of people are surprised, and I know I'm one of them, just holding as well as it is. And that's where you don't know, like, how much is priced in? How much are they just waiting on earnings to come out, right? How much is the fact we got below the weekly expected move, and now we're back above it, and this is what the option market is waiting on, because a lot of people bought puts and stuff, waiting for this thing to collapse or something. And again, it's so far below all the moving averages. I mean, this year, 2024, I don't know if it's going to rank. What does it rank as the worst year for Tesla at this point in time? And I mean, you look at this thing. Everything else is way up. This thing's down 36%. Ugh. And when I was talking about, the deliveries yesterday, this is the deliveries yesterday right here. You can see it. I mean, that is Q1, and Q1 is always their worst, usually. They say that, and you look at the chart and you go, wait, maybe not. But that's down, obviously, even from last year, Q1. And so, and the crazy part about it is, man, like, I guess this is where Elon was warning too. Like, if BYD moves up into America and all these other markets, right, and they're a real company, they create batteries, they create all kinds of stuff, and like you said, they're real competitors, then boy, that's going to be very interesting to see what happens to the market share in America, because it already fell in China, right? And so it's just something to keep in mind. Again, a lot of the charts don't care about that, and we'll see what happens on Q1 earnings, because it usually does bottom out and start to move up from there. But again, we'll have to see on that one. Let me know your prediction in the bottom. Now, when it comes to red folder news, we're going to have, again, initial jobless claims, more job data coming out, shocker there. Going to have some smaller bill auction, and then 20 more Fed speakers, right? And they've been all over the place because they wouldn't really say anything like positive or negative. They've kind of been like, oh, maybe do rate cuts, because one of them came out there and said, oh, we're doing one rate cut, right? And then here comes Jerome Powell at lunchtime, basically saying the same stuff, that data, we were data dependent, and the data hadn't surprised us. Obviously, inflation keeps going up and all that good stuff. Maybe there's not many rate hikes, but he does hint at rate hikes this year, right? When a lot of people say, no, the rate hikes are off the table with all this data. But again, he's Jerome Powell, so he's going to say what he wants to say and stuff. So, we'll see what happens, but they are rolling out in full force out there talking and stuff. So let me know your predictions tomorrow and stuff. And again, I mean, pullbacks are a good thing if you get them, right? That's the way it is. We moved up so fast, right? It's not a bad thing. People see red and they all freak out and go, oh my goodness. And you're just in that weird time frame where, April's is bad for semiconductors. Usually you're kind of almost seeing that. And then, it can be really good for especially small caps and some others, right, to do well in. But then you come after May, and it's like I showed you, it's really 60-40, 60 good, 40 bad over the last like 10 years at least, that is. And so, we're in a weird spot. So we'll see how it goes. Let me know what you think and how you're predicting and stuff. So, and again, I appreciate all the comments and everything. Enjoyed them all. Please hit that like and subscribe button on your way out. And I will see you tomorrow for another fun, volatile day, I am pretty sure. So have a good one, guys.